Traders, welcome to today's webinar event. I am your host, Sean Kozak. I am the president of NeuroStreet's Trading Academy. And today is a very special webinar. We are officially launching the joint venture affiliation with COTBASE. I have the privilege of bringing in Thomas and Valiant, who are the founders of COTBASE. COTBASE and I have been discussing the integration of the commitment of traders data. They work with institutional clients and retail traders all over the futures industry. And in my opinion, they pose as one of the most sophisticated integrations I've ever seen for the commitment of traders report. Before we get started, I always like to cover some ground rules for the event. We are recording this event. We will be presenting the recording after. If you cannot stay for the entire webinar, or you have to step out and step back in, please do so. Please note that we will be answering questions periodically through the event, but we will reserve time at the end of the event for Q&A. If you have a question, please type it in the chat box and we'll do our best to answer accordingly during the time. More importantly, guys, if you have any specific questions that are on any of the topics at hand, just please chime in and we'll be more than happy to assist. I do need to cover a quick disclaimer before we bring them on the mic. So as always, if you are trading, please know the risks associated with the business. And if you have any questions associated with the risks set by the regulatory bodies, please don't hesitate to get in touch with us and we will put you in touch with legal. Right, so moving forward, I want to welcome Thomas and Valiant with COTBASE. Thomas, if you want, I'm going to pass the mic over to you. And I'm going to stop sharing my screen and I'm going to give you the opportunity to share yours and I will mute the mic. It's all yours, my friend.
Okay, thanks, Sean. Just give me a moment and I'll share our screen with you. Okay, and there we go. So welcome everyone. My name is Thomas and Valiant is with me as well. I hope you hear us well. This is going to be an introduction to COT analysis. I'd like to make it clear that COT analysis is actually a not that difficult, but a topic that could be explained for many, many hours. Here in this webinar, I just want to focus on the basics so you understand what the COT analysis is really about, the basics. First of all, starting off with what COT means. It means commitments of traders. And this is a data which is not derived from price. That's, I think, something very unique. It's an indicator you're going to see in a moment that is reflecting to fundamental data. It's produced by CFTC, the Commodity Futures Trading Commission. It's a data coming on a weekly basis, usually on Fridays, 3:30 p.m. Eastern. And it breaks down the open interest into three main trader categories. These are the commercials, large speculators, and small speculators. And the data is compiled on futures only data, futures and options. We also made it for options data as well. So how do we analyze the COT data? We're interested in net positions of these trader categories. So we subtract, for instance, here in this example, short positions for commercials from long positions to arrive to the net amount of positions for that trader category. Now let me go switch my screen and show you our service. So this is what you would see if you enter COTBASE. This is the main platform. And here you can see a lot of markets, a lot of numbers. I'm going to explain this to you in just a moment. Here on the settings, everything is default. So we're looking at the classic COT report type. There are many different report types. The reason we like to look at this is it has the longest history dating back to the early 1980s. And in this part of the webinar, I just want to show you very briefly how I usually look at the data. So first off, I'm very much interested in how these traders change their positions from the previous week. And if you click on this 52 weeks change over here, that basically means that we are looking at the last report's change compared to a 52 weeks time range. Let me open coffee for you, and it's going to be more clear. I know it might look a lot. I'm going to try to keep it simple and slow so you understand. So in the first part, we are looking at changes. These are the changes you're going to see in NinjaTrader later on in a different format. But here, I just want to focus on the very simple COT charts, which are this red line indicating commercials net positions. The green line is indicating large speculators net positions, and the blue line here on a different scale, because they are small speculators, they are the small speculators. And the changes are simply the changes from week to week in their net positions. Now, the reason we're looking at those is larger changes. So large changes, what I mean by that, obviously, if we look at a longer time frame, we can state that on average, on a specific market, changes are 10%, 5%. But when we see a larger change, that means something's going on and we can act upon that. So that's why we are analyzing changes. The other tool that we use is the COT Extreme indicator. Now you can see I'm clicking on these buttons, and this is commercials. You can actually look at large speculators and small speculators. The reason commercials are the first, because they're the ones who we want to follow the smart money when there's a shift in the trend. Let me show you soybeans, because I believe soybeans markets are great for COT analysis. As I've stated just a few minutes ago, you must understand, although these charts look very similar to traditional indicators, RSI, anything, they are not derived from the price. So I would like you to please not forget to look at the COT data in a little bit different way as you normally trade. Most indicators are coming from the price data itself. But what's wonderful and what is really amazing and interesting about COT data is it's simply showing you a fundamental picture of the market in technical terms. And I believe all of us here are technical traders, but it's sometimes, you know, good to look at the fundamentals a little bit to see what the big players of the market are doing. And here, as I said, I'd like to show you examples for COT extreme signals. I'd like to stop for a second. So please understand we have two main COT signaling tools. One is the COT change. The other is the COT extreme. And then, of course, we can dig deeper and use multiple tools. On the left side here, we have settings. I don't want to go into that now. Just to keep it simple, we have the COT change, which is a wonderful tool on a shorter time frame. And the COT extreme, which helps you identify major trends. Here in the soybeans example I'm showing it to you right now, you can see the COT charts, and we have some large bumps in both directions. What it means, for instance, here we have this largest bump. The reason I'm on it, it's from June of 2016. This is a wonderful bearish COT extreme signal. You can see that commercials net positions gradually came down to a net short of 200,000 contracts, where large speculators were at roughly 250,000 contracts net long level. And this coincided with this top. It indicated, of course, you know, it's the stress level in this market is growing week by week, and we come to an extreme level where the market simply shifts and the trend is over, and then we shift to a downtrend. And of course, the opposite signal will be again successful. You can see here we have a relative bullish extreme signal, and then after a few months time, we reach an even greater extreme. The way I use this extreme COT extreme signal is I compare this to the history. Minimum 5 years I would suggest to look at, but of course you can always look at even longer time frames if you wish. The signals will be very, very clear. You can see that. Now, as I have said, COT is a data coming not from the price, but from a separate fundamental pool. So each and every market has its own characteristics, which means we're talking about soybeans here. But if I were to jump over to palladium, for instance, we can see that the changes in the report could be a little bit different. Just going to go back to the 5 years chart. You can see it's a little bit, the chart is a bit different, right? If we move on to, let's say, crude oil, again, we can see something else. And it's simply because we're talking about different markets and traders act differently in different markets. I haven't emphasized too much small speculators, but I would like to talk a little bit about them. Small speculators are small because they are not reaching a reporting limit for CFTC. They're generally smaller traders who trade a few contracts. Obviously, if you are a commercial participant hedging in the market, you become a commercial. If you're a large hedge fund, institutional trader, you can be in large speculators. And sometimes small speculator signals are even better than commercials or large speculators signals. So this was just a brief peek on the system itself. Of course, there's a lot to talk about, and we can dig deeper later on. I just wanted to show on these examples what COT analysis looks like in very basic terms. And just to shift a little bit the attention on us, so you understand who we are and where COTBASE comes from. So Bounty and I, we've been trading for roughly 19 years now. And we started using COT data early on and came up with a wonderful system roughly 10 years ago. But that system was in Excel. And it was a little bit hard to use that. It took time to upload the data into it, and it was just not user friendly. So we came up with the idea to find a wonderful programmer who will help us put everything into a system, and that could actually be put on a website. And then, of course, this wonderful system could be shared with others. So that's the simple concept behind us. And this example here is actually a very, very nice example from 2010 when we had that Excel sheet. So just interesting. COTBASE, I was talking about the net positions because that's what everybody usually looks at. But if you're a person who'd like to really dig deep into different data sets, then you can do that. We have 13 other data sets to look at. And as I've said, we've introduced the options only data. I believe this is very unique. We're the only ones who provide options only data. It's usually the futures only and the futures and options. That's actually that CFTC publishes. So you have the futures only data and the futures and options. We created the options only. Of course, it's not a huge secret. We simply subtracted the futures data from the futures and options data to get the options only data, which I believe was a wonderful thing to do, because here in this example, on the gold market, you see gold is on the chart above. On the left side, we're looking at the futures and options data. So the COT charts that you see here are futures and options data based. But on the right side, we have the gold options only data. And you can see that the changes from week to week are more clear, and they are beautiful signals. By the way, if you look at this example, it's from May of this year when gold was trading around 1,300, and gold has risen since then. So we had some really cool, useful signals from the COT report back then. We also track multi-report COT changes. Now, I'm not going to go into that. I don't want to make it too techy for you, but we do actually look at not only one report change, but we gather multiple reports and compare that to the defined time range. So that's something we do. And of course, we have even more data. We analyze the COT index, the COT move index, raw volume, and open interest. And we also analyze volume and open interest. And that's not all. We have a lot of ways to look at markets. So we can actually go into one specific market and go through all the data sets. We call these the market dashboards. Talking about markets, we actually add markets continuously to our system. Whenever there's a new market that CFTC publishes COT data on, we add it to the system. We are very proud to say that we've added Bitcoin as well. So anybody trading Bitcoin can analyze the COT data on that as well. And then here with NinjaTrader indicator that we've just recently came out with, I would like to give the mic back to Sean because he's been actually using our NinjaTrader indicator and is more, I would say, experienced in using that. So Sean, if you would like to over.
Yeah, sure. I'll just take the mic back here, guys. And thanks, Thomas, for giving a preamble to that. So just to kind of give you guys a little bit of a heads up here, my objective for today's event is to take the theory of the commitment of traders and basically kind of translate it into actionable practicalities, right? So give me a second here. I just want to open up the chat box and I want to open up the participant windows. I want to see who's in here and just kind of, I want to start going through a few questions here. Now, just a show of hands, how many of you guys have ever looked at the COT data before? Can you guys just give me a yes in the chat box? Give me a Y if you've looked at the COT, if you've ever heard of it before, if you're familiar with it, outside of maybe us talking about it in the trading room for the past week or two. I've been reserving some of the golden nuggets, if you will. I guess you would say some of the golden goose eggs, right? Because Thomas and Valiant, we've been collaborating for a bit, I think a bit of a part of a month or two now on looking at the dashboard, and I've reserved the opportunity, I would say, to really kind of go into more detail in how this can be used for long-term trading. More importantly, shorter term trading for those of you that are swing trading and also day trading, right? Give me a round of yeses. How many of you guys are swing trading futures versus day? Just give me an S for swing, D for day, or an SD if you're doing both, right? I just want to kind of know for the majority, is there anybody here swing trading futures or all you guys mostly day trading? The reason I'm asking is I know a lot of you, but you never know. There might be a few in here, and I just want to kind of gauge the audience, and I like to ask these questions because it really helps me kind of put the feelers out for you, okay? And so to kind of extend on what Thomas has been explaining, the commitment to traders is basically an institutional tool. It's reporting institutional data to the regulatory bodies, the CFTC and the Commodities Exchange Commission, and et cetera, but it's for a reason, right? They need to expose their positions, right? They're managing funds, they're looking at big data, et cetera. And I may not have all the facts, but I'll just tell you kind of from a day trading perspective. Whenever I see these types of things, I ask myself a very important question. Number one is, okay, if the COT report is designed for institutions, it's pretty important, right? Because the institutions are what create the market. Us day traders need to rely on the institutions to create the liquidity and the movement, right? Number two, the question becomes is how can we use their information to tell us what to expect in the day trading industry, right? In terms of short-term directional biases and also trade locations for really good trading opportunities, okay? Well, what I want to do first is before I go into the dashboard and kind of extend on what Thomas has talked about, I want to go in here and I want to open up this chart, okay? This is a chart of crude oil. It's probably one of the most heavily looked at day trading instruments for futures day traders. And I want to talk a little bit about what we're seeing here. Just want to talk a little bit about what this is, okay? I'm going to grab a cursor and we're going to explain this in detail. Because to me, I think this is absolutely fantastic. In fact, we're going to start using this in our trading room moving forward, and I'll explain why. You've got the big boys, right? We'll call those the big banks. You got the big guys, and you got the small guys, right? Let's just keep this in layman's terms. Who do you think is the big guys? You tell me. From just you guys can all just tell me, who do you think's the big guys? You tell me who's running the show in the markets. Hedge funds, Brian says, banks. Anybody else? Banks, insurance companies, pension funds. Yeah. Okay. Would you consider the big guys smart money or dumb money? Smart money, right? They got a pretty good pulse on the market. Why? Because they are the market, right? So when you talk about the small guys, that's prop, right? That's us, okay? As I hate to say it, we are technically dumb money. You know, I don't want to come out and say that we're all dumb in here, but compared to them, you know, most times we're not viewed as the smart money. But what if we can use the tools that tell us what the smart money is doing? Now, what I really like about the web-based platform is the web-based platform gives us a dashboard to go into the data and pay attention to it's kind of like, you know, when alarms go off, right? The web-based dashboard is like an alarm's going off. It's like, okay, wait a second, look at this market. There's some really big activity happening here, and you guys need to pay attention to it. What I really like about the indicator is that you get to narrow it down to a micro perspective, and we get to really kind of to hone in onto what us day traders are relying on, which is, you know, kind of what's going on in the smaller term picture, because it's really good to have macro perspective, but we still need to be able to translate that into the smaller time frame environments, right? So what I'm going to do is I'm going to explain up here. You can see that this window, this graph over here is just, it's kind of a line graph of what you're seeing on the web-based platform. So the indicator in NinjaTrader allows you to be able to take the web-based data and transfer it over to the net change in commercials, big banks, and net speculators, small speculators, etc. Okay. But what I really, really like about what they've done about the COT indicator is that we can simplify it down. Okay. So what I'm going to do is I'm going to just remove this for a second. Okay. I'm going to just take this out. And what I'm going to do is I'm going to now talk a little bit about what we're seeing. The red is smart money, okay? The blue is us, okay? What do you think we should be paying attention to if we're looking at this information? Anybody here have an opinion on that? Red or blue? Because I'm all about trying to understand what they're most likely going to be doing, right? Now, I'm not saying you shouldn't look at all the data, and I'm not saying that we shouldn't have the web-based version out and we shouldn't have all of the indicators on. But if you're really wanting to get a pulse on the market, who do you think the smart money's trading against? Everybody else, right? So whenever we're below the zero line, I'm going to just put zero line here and zero line here. A lot of times what you're going to find is when these guys start to go down, you start seeing buying in the other side. Well, professional traders need to take trading against the other side of the market, right? Sometimes what you're going to find is you're going to find correlations where the two of them line up, and normally it's a squeeze in the market. Who do you think is going to win? The small guys or the big guys? You tell me. Not us. So we might see, these random acts where, we see, right here, we've got, this is a great example right here. I'm going to just delete this for example. I'm just going to go over here. This is a great example. You got situations where both the big guys and the small guys are buying. Okay. And we get into what we call a squeeze here, right? What ends up happening? Okay. What ends up happening? Okay. Big breakouts happen, okay? Now, what I want to do is I want to talk a little bit about what's taking place over here right now. Right over here. We are on crude oil. I don't know if you guys remember when we had the big gap up in oil. We had the Iranian attacks, okay, in the fundamentals, okay? After that took place, okay, when that gapped up, big guys were selling into that. Big guys were selling into that before it happened, okay? Who do you think got all emotional? Okay? All the small guys, right? Oh my God, we're gapping up in crude. Crude's going higher. Everybody's happening. Guess what ended up happening, okay? Once the market settled down, okay? Once the market settled down, the big guys started buying again. Where did they start buying again? They started legging into the market here. What's been happening right now in crude? Who do you think is keeping this consolidation in here right now? Big guys, okay? Institutions. Now, how do we translate this to what most of you guys are looking at? Well, this is what I really, really like about what they've done is it allows us to simplify, okay? If we know that institutions are buying the market right now, does that mean that the market's going to go up right now? Maybe not. Sometimes it takes a little while for that to kick in, right? Let me ask you a question. If the COTBASE is designed for institutions, and market and volume profile is designed for institutions, don't you think that they should have some type of similarities in how they could be used against? Give me a yes or no. If you think that if you got an institutional profiling technique and you take COT data, don't you think that institutions are looking at the COT and the profiles? Give me a yes or no. Because remember when we talk about profiles, they're designed for institutions. In fact, Seedomeyer designed it for big banks. It was actually designed for exchange members back in the day, years ago, right? So let me kind of explain something. If we start thinking about it, if you guys know, NeuroStreet, we spend a lot of time talking about profiles. We spend a lot of time talking about being able to locate the directional bias of the market, right? Well, if we look at the monthly profiles of crude oil, and we know that the COTBASE, they're buying right now. Where do you think we should start paying attention to what happens in the profiles? Where buying takes place in the profiles, right? Look what's happened right now on crude oil. And I'll go to a different market in a second, okay? I want to just point out, this is a monthly profile, okay? This was last month. This is this month. Right now, we've kept ourselves into this range for the past 2 weeks. I'm going to draw a little box on the chart so that you guys can understand there's the value area low for volume and the value area low for time. This is what we consider arbitrage on monthly levels, okay? That is monthly levels, okay, right there. Now, if we know that the big banks are buying crude oil right now, what do you think happened when price got down to the lows of this profile? You tell me what you think happened. Okay. What do you think happened when price got down to the bottom of this profile? Let's take a look. So the question becomes, give me a second here. Let's go in here. Right there. Who do you think's buying at the lows right now? Every time we get down there. Big banks. Interesting, right? Smart money. Now, how do we use this for our day trading analysis? It can be used not only for big picture, but it also gets you in tune with what the market's doing. One of the biggest lessons I've learned in trading, and one of the reasons why I run a large futures trading room, is because I'm able to help new traders understand how to break down the market. So many people get tunnel vision, focusing on the indicators to the trigger to the next 10 ticks of profit, but they never really have an understanding of how to take the data because they lose sight of the fact that the institutions are giving us the market, okay? So interesting enough, today when crude oil came off the inventory report and they drove it down, institutions were buying near the value area lows of this market, guys. I can assure you this right now, that even any sell-off off the crude report today was not smart money, okay? Let's go to a different market and you guys tell me. We've got crude oil, gold, natural gas. Let's take a look at the euro. You guys want to take a look at the euro for a second? Let's take a look at the euro, okay? I'm going to go over to the COT data. We're going to pull up the euro futures market, okay? Let's just pull the euro up here for a second. Interesting enough, what started happening here on the change? I'm going to draw a little line in the sand here. It's a real great example. What happened here on that bar? You tell me. If we're coming in here, what was that bar significant about, right? We were coming in, down day, down day, down day, down day, boom. Okay. You got to remember what Thomas said, and I think it was the smartest thing I've heard all of the event. This is not a technical indicator. This is a fundamental indicator. So it has nothing to do with price. It has nothing to do with overbought or oversold. Therefore, it has no correlation to anything else other than pure fundamental data in what the banks are doing. And they were telling us this before it happened. Okay, so let me just kind of go back to the date and time on that. What was the date on that? Let's just kind of go back to the timestamp right here. The date was the 1st, October 1st, okay? Let's go in here and I'm going to add the euro to this market. Let's go to the euro. It's going to take a second to load because I'm loading monthly profiles, okay? Now this is so important, guys, because we're going to be using the dashboard to help us understand how to look for the gems. But we're also going to be using the correlation of the smart money data to help us understand what directions of the profiles are going to be working. Now we're going to give it time to split. Okay, I got to give this time to split. Let's go here and we're going to merge this back. Give me 1 second. And I know this is kind of a double-edged, presentation because I want to show the correlation between. Okay, let's merge these back, auto merge. Give it a second while the data loads. So we're going to merge these profiles and we're going to split these profiles. I'm going to just split the arbitrage on the week and on the month. So we'll bear with me for a second. And the purpose for this example is to hide the price bars for a second. I don't want you to even look at current price. Okay, right here. I want you to pay attention to when this month started. Okay, right there on that blue line is when the institution showed us on the COT report that they started buying the euro. I'm going to draw a little line in the sand right now, and I'm going to basically just draw this line across right here. Okay, the value area low. Okay, now what I want to do before we go into anything, okay, I want to go over here to the weekly, and we're going to go into the euro. Okay. Bear with me, guys. Bear with me. There's a method to our madness here, okay? I want to point out a few things. I want to point out little boxes in the sand. I'm just going to draw little boxes off the lows. There was a low here. Value area low is here. Okay, and we're going to just draw little boxes. Right here. Right here and right here. We're just going to extend them across. I'm going to copy that over. And we haven't even looked at price yet. We're just looking at COT data and profile directions. Because remember, who's using the profiles? Institutions. Let's just do this, bring this over. Okay. Remember, they're buying the market. So if we want to trade with the smart money, right? And this is a strategy on its own, guys, using the COT data, how we're going to take this information. Okay. That's the euro. So we've got the monthly. Okay, and then we've got weekly direction, right? Well, if we go in here and just show you, I guess you'd say the price bars here. What happened when we got down at the bottom? Let's not worry about everything else. Let's just take a look what happened at the bottom. Price came down to the monthly value area low right there, and institutions bought this market up massively right there, right off the lows, okay? I want to go back into the weekly now and show you the more responsive trend because this is easier to see. I'm going to turn the price bars on. What happened every time we got to value area lows on this market? Every single time we came close to big money participation. With the exception of this overshoot down here, this was obviously news catalyst. Where did they bring it? Right? Where did they bring that? Right down to value area lows. Who do you think bought the euro at 104? The reason I'm talking about the buy side of this market has nothing to do with the profiles. It has everything to do with this indicator right here. Fundamental reasons to want to buy value area lows on COT data. Now, this might not be the way that Thomas or Valiant trade COT data. But let me tell you, as an active intraday futures trader, I want to know why I'd want to be buying versus selling. How many of you guys can see that right here? Let me take a look at where we're at right now on the last low. We came up. What did they do on the retest of that value area low? Okay. We never got an opportunity to come back to this low, did we? The trend was so strong. What about this low here? Every time we got to the lows in the trend on the euro, guess what they did? They lifted the market. Guys, let's take a different market. Let's take a look at gold. I want to show you how powerful this is across the board. Let's go to the gold market. Okay, let's go to gold. Interesting. Okay. So let's just take a look at the last change, because I'm always about looking at the most recent data. We could go back and cherry pick all the examples you want, but if you're like me, I want to know right now, how can I make money using this stuff? Okay, let's go back right here. Okay, the last up bar we had on gold here was on the 8th of October. Okay, you guys with me on this? Let's go down here and take this vertical line in the sand. Boom, right there. I'm paying attention to the net commercials. I could look at small speculators, but technically I'm already one of them. Give me a Y if you can find humor in that, right? I don't want to be these guys. I want to be on the red side of the fence, right? It's kind of like, you want to be a Spartan or do you want to be the rest, right? Everybody remembers the 300 Spartans, right? Hell no, right? So let's kind of talk about this for a second. If we know gold starts selling off at that level, okay, let's just go over to gold for a second. Okay, I'm just grabbing random charts here, guys. Random charts. Let's switch over. Give it a second to load. Gold's got to load. And I appreciate your patience because we're loading 3 months of profiles data. So this is why I want to talk about that blue line in the sand. That blue line in the sand, okay, let's just turn this off for a second. The blue line in the sand. Okay. So right there is where the institution started selling, okay, on the month. It's where they really start to sell. So if I go in here and I put this arbitrage level at the top, I don't think we got back up to the value highs in there. We never did get back up to the value highs. So on the monthly profile, if I turn on these price bars, if I go back here doesn't count because that was before they started selling. If I go back in here, right there, they never did get back up to 25, 15, 25, the expensive part of the month. But remember, we're looking at big picture monthly profiles. It's pretty macro, right? So if we can't see the levels on the monthly, okay, let's hide these price bars again. And let's go back into the weekly. Let's put on the gold market. Let's hide these price bars. I don't like to cherry pick. I like to show gold, and I like to show the gold and kind of have the aha moments like everybody else, because I think it's the fun part about this. It's kind of like, wow, look at this. And we're going to take a look here. We're going to take a look at this blue line. This blue line is significant to me, isn't it? What happened at the blue line, everybody? You guys tell me. Let's go back. I want to make sure you guys understand this. What happened at that blue line on gold? Was it the smart money started selling or the dumb money? Smart money started to sell, Brian. Smart money started to sell. They started to dip. They started to drop it, right? Smart money started to go below the zero line at the blue line. Brian says, shit. Don't worry. This is a learning event too, okay? So let's go into the gold market. So if I know at that blue line, that's where the institution started to sell. So now what I get to do is I get to do my trusty old draw tool, and I'm going to draw little lines in the sand. Okay, there's value area highs, value area high arbitrage levels here and here. Okay, let's just continue on. I don't care about what current price did. I want to take a look at all these little value area highs in here, all these profile levels. Okay, let's wait for it. There's another one, because this is what happens at value area highs. What's going on at the value area highs, guys? For those of you that are in our trading rooms, what's taking place in the value area highs? Selling or buying? Yeah, exactly. Selling, right? So if we know the institutions are selling this market, wouldn't it make sense to try to sell at the right locations with them? Right? Let's wait for it. Let's wait for it. Let's continue on. Right here. Give it a sec here, guys. Give it a sec. Right here. Right there. Now remember, this is extending out. Patience is a virtue right there. That's extending out. And this is also extending out. We want to be selling where the institutions are, right? So let's just go back to the blue line now and just show you where the magic happens. Okay, the magic happens in these blue lines where we would expect the big boys to start selling this market. Don't worry about before the blue. Not there, not there, not there, not there, not there. Okay, right up here on that day is when we can start looking at arbitrage levels. Okay, so right up here, we get up into value area highs, right? You can see that they dropped it. What did they do right here when they came back to it? Right inside that value area high, they dropped it. Who do you think's selling that on gold, guys? Small money or big money? We already know the COT data told us at that blue line is when the institutions change positions to short selling this market, right? So if we're coming in as a day trader, we got the COT to tell us in advance, okay, big boys are doing this now. We need to start thinking, okay, on all the profiles, what do you think is going to start happening at these areas? Let's continue on and watch every other profile. Came right back up to it. Boom. They dropped it. They drove through it on the news. Okay. They overshot it a bit here. Obviously, it's been touched several times. Okay. They brought it back down. They sold it off. Okay. So let's go back here and let's auto split. There we go. Let's continue on. What happened when we got back up here into this profile level? Who do you think sold this right here? Right there to there. Who do you think sold that? Smart money or big money? Smart money or small money, I guess you'd say. I'm here to tell you that it's not just about the profiles. It's about what to expect, okay? What to expect every time we get to these profiles. We shift out of here. If we break out of here, guess what? I want to pay attention. That's smart money, by the way. They're driving price up. They're driving price up to the value area highs, overshooting it and tanking it. What happens when we got back right up here? Another value area high. Dropped it out of that value area high. Mr. Big Boys. What do we happen when we get back up to this next level here? Wait for it, coming back up, coming back up. Okay, now we're in another value area high. Who do you think sold that? Gunther, I think you have it reversed. We are looking at selling. We're talking about selling only, selling only, selling only, selling only. We're only talking about the sells. Sell the value area highs and buy the value area lows. Institutions started telling us right here that they are selling this market. The last one here, only sells. Only sells here, only. So this is about understanding the correlation between the COT and the profile data. Wait happens, wait for it, come back up. What about right there? Who do you think was participating here at 1502? Small money or big money? This was identified yesterday or the day before. Who do you think was identified here in advance? Like, this is serious stuff, guys. If we know that the big boys are trying to drive the market up into key selling areas, what can we expect at value area highs when the institutions are selling this market? Selling, 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 selling all the time at value area highs, selling. Okay. Right here, keep going down. Huge drop out of that value area high. Wait for it. What about this up here? Came up to the value highs, dropping down out of value highs, only looking at the highs, not looking at the lows. Who do you think's trading at the lows? Who's trading at the lows right now? Us, retail traders, trading against them. What a perspective change. What a perspective change, right? If we can start thinking like them. Okay, came in, dropped out today. Who do you think sold gold today into the institutional value highs? We looked at these levels in our trade room today, and we talked about those value highs coming up into the weeklies. Who do you think sold gold out of the $14.99 today at 15.01? I told the traders today too, we were looking for a bounce trade on here, but from a big picture perspective, who do you think that is? That's the smart money, man, because they are telling us, right? They are telling us that we now know what they're doing. So let me explain this. Has nothing to do with the profiles. The profiles tells us where to get into the market. This tells us why we want to be doing that. This is more important than the profiles, in my opinion. I personally want to know what the heck's going on between the big guys that we don't know about. Do you have a guy at the Goldman Sachs telling you what they're doing? No. It's a big statement here. So for those of you that know me, I don't really endorse too many people, okay? I don't really endorse too many people. But when I start seeing stuff like this, and it can add transparency to everything that we do at the Academy, it's why we decide to partner with them, okay? I'm going to be using this indicator in my trading room every single day. And that's a really big statement, okay? Why? Because I really just want to have my pulse on what the big guys are doing. In fact, I could take this off if I just want to simplify down and you really don't want to confuse the noise. You could just do that. And how clean is that? You have this chart running on one of your monitors, and this updates day by day on this position here. So this, every day you get to know what they're doing. Every day, every day, every day, right? At the end of the day, that'll update, okay? And on big changes, the COT changes, right? The COT will change. Okay, so let me give you an example. We could look at natural gas. I haven't looked at natural gas. We could look at the British pound. Okay, we could look at, say, the NQ. The NQ is a pretty heavily traded market by retail traders. We could look at the NQ. Okay, the NQ, they're buying this. The NQ started, the big boys started buying the NQ here. Okay, and the date on that was, let's just go back. The date on the NQ, give me a second here. Right there. So let's just draw a little line in the sand. Are you guys enjoying this stuff? Give me a yes. Yes or no. You guys like this stuff? I want to know what's going on. I don't want to just have indicators on my chart. I want to be able to know why. On the 8th of October, the COT indicator pointed out that they started to buy into that sell-off. The institutions bought into that down day on the NASDAQ. Let's go to the 8th, okay? So the 8th of October. Let's go to the NQ. We'll go into those questions after. You guys are asking fantastic questions. I just want to get into the technicals first, and then we'll go into all the questions, and I'll have Thomas come back in here, and we'll do a big dog and pony show, and we'll wrap it all up. Okay, let's go to the NQ. NQ in here, right there. We're going to look at the monthly levels on the NQ just to see if they came down to the monthly lows or if the profile split. Okay. I'm really, really excited about this stuff, guys. We've been holding off. And for those of you that came here today, you're going to be able to take advantage of an amazing offer that includes both the report on the web for web-based service as well as the indicator. And there's packages that are going to have both. We're going to be talking about, we got to give the NQ time to load. The NQ's got a lot of tick data, and I'm loading 3 months of profiles here. So please bear with me as it loads, guys. It will load. It just needs to take a second. So that blue line signals net change in institutional perspective. That blue line is going to allow us to basically show us that the institutions are buying. I'm going to need a bigger computer. No. No, normally I would be looking at the weekly levels primarily, but I do want to point the monthly out here as it's quite important, just to show you the big macro perspective, right, guys? So let's just keep our fingers crossed that the NQ can hold up here. I believe it can. I trust it will. It's just got to calculate the data. The NQ's got the most tick data, right? Maybe there it is. Patience is a virtue. So isn't this interesting? Okay, right from that blue line, okay, I want to draw little yellow lines right here. Just little simple yellow lines right there. Boom. Okay, and at the top of that one, I want to draw another yellow line up here at this low here. And now on the recent shift, we just shifted up on the NQ. I want to draw that yellow line right there, okay? So by definition, okay, by definition, from this day on, you guys with me? If we got here, we got here, we got here, institutions should be buying the profiles. Give me a why if you agree with that statement. By definition, after everything we've just been showing me, give me a why. Everybody understands that? Buying at the lows, question, why are we buying at the lows? Because the COT indicator told us that the net positions on the NQ changed. Do we know by any degree of how much? No, we just know we can go onto the web-based platform for that, and we'll go there in a second. But the indicator from a technical perspective, by definition, every time price got down there, let's just put the charts on, okay? What happened? Well, we can see what they did here. They drove it down. Who do you think bought that? We got above, formed that profile on the P. What happened here? We formed that profile on the P. What happened here? What happened today? We went long there today. I made 2 longs on those small day trades going long. I was trading with the smart money today, and I didn't even know it. And I didn't even know it, guys. That's as transparent as it gets. I was on the right side of the institutions today, and I didn't know it until just now. Isn't that a bold laugh, right? Can you guys see why this is so important for us to understand that? Okay, because it's the blue line here that tells us this. This is when the COT data told us that. Remember, this is a monthly, Richard. Don't forget, we're looking at macro, big picture right now. Big picture, because COT starts as big picture. If we go down to the weekly now, let's take these off. Let's just clean this up. And then after we do this demonstration on the NQ, I'm going to wrap it back up. We'll bring Thomas on and we'll start talking about the offer. Okay, let's go into the weekly on the NQ. Question for you, Thomas. Maybe you can just come on the mic here while I'm asking this. On the indicator, maybe Valiant would know.
Do you hear me?
Yeah, I can hear you just fine. On this indicator right here, okay, when that switches up, is that on a day-by-day basis, or is that on is that from the change off of last week?
It's from the change of last week.
Perfect. So that is when we knew from the change of last week. Okay. But we can see that on a day-by-day basis on the bars, correct?
Yep. So basically, since the COT data is a weekly data, that's the reason why it doesn't change. So you can see that we have 5 bars all the time. So we get the data on Friday, and that just, it stays there for the next week. and throughout the week, it's constant. It doesn't change from day to day.
So
Actually, to be honest with you, just a little bit of history. COT data started off on a monthly basis. Then it went on to a bi-weekly basis. Now it's a weekly. Who knows? Maybe once we'll get to a daily COT data. That would be fantastic.
Well, look at this here, guys. So that's last Friday. So last Friday, that was reported. So that tells us coming in on Monday and Tuesday this week, if we wanted to trade just in the direction of the big boys, that's what they were doing all week. Okay? COT is not a lagging indicator, Joe, because it has nothing to do with price. It has everything to do with fundamental. So let me just show you this, and I'll mute your mic for a second there, Thomas, and we'll just kind of wrap this up here. I'm going to show the NQ, okay? And then we're going to just go back into the offer and discuss some of these questions, and we're going to go into a whole bunch of fun stuff, okay? Right there. On that blue line was Monday, right there, October 9th. If I'm not mistaken, 9th was a Monday. No, 9th was a Wednesday. That was a 7th. So let's go in here, 8. So we got that at the close of Monday. We seen that they were going to do that, okay? And I probably could go over one more day on the NQ. If we go into this, that was, I think it was that day, right? It comes in on the last day of change, if I'm not mistaken, right here. And then we get the open, that data comes in. So let's go back and just draw a little blue line right here, okay? I know that based off that blue line is where the institutions told us they've shifted to net buying. So I'm going to put a little line on the weeklies now, just like we did on the monthlies. Remember, all the monthlies respected. There was 3 big trades. Right there, there's a line. I'm going to wait for the next profile shift, and I'm going to go in here. There's a line. I'm just making it visual easy for you guys, okay? Let's wait for it up here. I like to make things visual easy. I'm a visual learner. Most people are, okay? There's another, it's lining up to the same location. And then we jumped up. I think we're almost there too today, right there, the weeklies. These are weeklies now, right there, okay? And we are there. That is where we're at. So by definition, okay, just like the monthlies, one of the most relevant webinars ever. Who would have known? Almost skipped this presentation. You got to stick around NSTA, baby. We only bring in the golden stuff. Take a look at this. By definition, we should only be looking to buy here and here. Does everybody understand that? Give me a yes. Give me a Y that everybody's on the same page. We're looking at weeklies now, a little bit more micro. We trade the weeklies on the day trading time frame. We are participating in this time frame. At the blue line between the 8th of October and the 9th of October, what should we be thinking? Like the smart money or unfortunately, everybody else? Okay, smart money. Let's go in and turn this on. Okay, clean this off and just take a look at every retest after we had a profile shift. Every time we had a profile shift from here to here, let's go here. We shifted this profile here to there. They came down and they hit the value area low. Every time we had a profile shift from here to here, they came down and they hit the value area low. What did they do from that value area low? They drove it up. What did they do from this value area low? They drove it up. We came down, hit it, we got a bounce. They overshot it because this was no longer fresh levels. When we came back up, okay, what did they do? Every time we came down, boom, right there, they drove it up. Boom, they drove it up. What did they do today? Boom, they drove it up. Boom, they're slowly driving it up. We traded this today, long. We were net long this in the trade room today. We took back-to-back wins trading the NQ to the long side of this market in demand and off the value area lows. Who in here thinks this is important? Give me a yes. Just to understand how to be able to know which side of the market we should be on. I think that's the concluding statement. What the COTBASE does, in my experience, is it tells us which side of the market we should be trading on, whether we want to be net long bias or net short bias. And then everything else we use can be honed in for better entries. But this is probably the most important part of what we're going to start to do in here. Okay. And on Friday, we'll have an understanding of what to do next week, which to me is fantastic, guys. So Thomas, I'm going to turn it over to you. Actually, before we do this, guys, let's kind of just share my slide. I'm going to share the slide for a second. And we've got an offer. Thomas, I'll get you to mute your mic. We'll answer questions. We'll go in here and we'll just share this now. We've got a link in here I'm going to give you guys. Thomas and Valiant have put together an opening package for the JV. Okay. The JV, I'm going to put a link in the chat box and we're going to explain this offer, guys. So actually give me a second here. Yeah. So you can click on that link. And really what it is, until Saturday, they're going to be offering a discount to their premium subscription service. What's really fantastic is that it's so inexpensive. Like, the pro membership includes the brand new NinjaTrader 8 indicator for 20% off. So you can subscribe as a member. For example, you can own your own NinjaTrader 8 indicator for $3.98 plus that a month, okay, if you choose the 2-year plan. Or you can take the indicator and the subscription forever. So let me kind of explain this. I know that you have to make a choice between a subscription and a purchase. But based off what I've just shown you, that's a game changer. So between me and you guys, you have a decision to make. You get indicator, subscription forever, no recurring fees, or you can subscribe at discounts, okay? Let me show you the website so you can understand what that looks like here, guys. The link is in the link is in the chat box. This is the offer page, which to me is really clean to understand, guys. You've got a 6-month, a 12-month, a 24-month, or an all-time option. So if you went to the all-time, okay, includes the indicator. You're saving 20%. I know guys in here that can make that in a couple days, just following the same stuff that we just talked about. Just trading the profiles the way that we're looking at, to demand and supply the way we're looking at. It's fantastic. Okay. So I'm going to leave it at that. Okay. Does everybody see the link in the chat box? It's just COTBASE/webinar right there. I want to turn this over to Thomas and thank you guys for being here. I'm actually excited to bring your stuff in, guys. You know, I've been working with a lot of companies for a very long time, but this stuff is pretty pivotal. It's pretty pivotal, especially from a technical perspective on the NinjaTrader side. When I first met Thomas and Valiant, guys, they didn't have the NinjaTrader 8 integration ready. And they pushed like crazy to get this out because I said, guys, we are all Ninja. Majority of us are on Ninja. And they worked like cats and dogs to get that stuff ready for you guys. So I really look forward to using it in the room. It's going to help us set the sentiment moving forward. Maybe I'll turn it over to you guys. Do you guys have any questions?
Okay, do you hear us?
Yeah, I hear you fine. Yeah.
Okay, wonderful. So if you guys have any questions, we can walk you through here.
So Jeff's saying, if the big boys are positioned long, doesn't that mean that the sellers to exit their positions, or am I just thinking like a small guy? You know, it really just depends your perspective, Jeff, but it says if the big boys are positioned long, doesn't that make them sellers to exit their position? Yes, but you got to understand when they're looking to engage their position, right? It's all about the engagement. Exit is one thing, but you want to understand what they're doing to get into the market because they're the ones that are going to set the pace. Mercia is asking, are you in Budapest?
Yep, we are. We're currently in Budapest.
Why don't you guys leave a comment? What was your thoughts on this webinar? What do you guys think about this event? You guys find this stuff relevant? I think they're probably questioning. Brian's saying very relevant. Gunther says yes. Okay, absolutely, Jeff is saying. Okay. So you've got a couple options. Okay. If you do the 6-month subscription, Okay. If you want the indicator, which I'm assuming everybody does, it's $20 a month. Okay. But you're billed 6 months, so you got a setup fee as well. You know, it really does depend on what your budget is, but I'll tell you right now, the best bang for the buck is obviously the one time, because you get the indicator and everything, but it's all about whether or not you guys are in the market for that now or not. I personally, I'm going to be integrating that for all of our markets. So if you're going to be trading with us in the trading room, you know, we're going to be looking at using the Ninja 8 indicator for what we're doing, and you're all set.
Brian has a question whether the report comes out on Monday or Friday. It comes out generally on Friday, with the exception of national holidays. It could be if there's a special holiday for that day, the CFTC will issue the report the next week on Monday. But generally speaking, it's on a Friday.
Mark wants to know, awesome tools, is PayPal available for one-time purchase?
Yeah, all our purchases are done through PayPal. Yeah.
Yeah, so we have the weekend to set up for next week's bias, Brian. Absolutely. That's it. To me, it's the most, like, I look at that and I'm like, man, I get to know Friday what we're planning on doing next week, right? Like, you guys could literally just, that could be your trading plan. You could come in and say, okay, whatever the side of the institutions are doing it, Sean says, Sean, are you selling it or COTBASE? No, they're selling it off their website. Yeah. Chris is wondering about the Canadian tax. Yeah. Yeah. It's, it's applied to the country you're in, guys, from a legality perspective. We're always above board here. Stevie Wonder can see the importance here. Absolutely. How about when government shuts down? Gunther, we just answered that. Like this week, that was why we had the discrepancy on the one day there, Thomas. I was wondering why it didn't start on the Monday, and Monday was a holiday.
Yep. Exactly. So when there is a government shutdown, that's tough, but let's hope that doesn't happen. I mean, it's a government agency, CFTC, so if the government shuts down, but that's not something that we're usually expecting. And if you look at the COT history, just simply looking at the charts that Sean was showing and I was showing to you myself, you can see it comes out pretty generally and every week.
Couple things too I forgot to mention, guys. If we log into the members area, okay, just a couple little golden nuggets for you, for those of you that are taking action on what we're doing. If we log into the members area, one of the things that I've been doing in the trading room that we've been able to clarify now with the team here at COTBASE is they kind of gave me kind of a rule of thumb to think about, right? So a rule of thumb for me is I'm going to be looking at the 52-week change of net commercials. This can be done on the indicator as well, okay? Let's just do this. This is all done on the indicator as well if we see a positive or negative change, right? But let me kind of explain something. If you're looking at metals, normally anything of a 10% variance is pretty important. Energy is 10%, currency is 10%. It's when you start getting into the indices and the treasuries, anything 25% or greater to the long or short side starts to peak of a serious interest. So I would take a screenshot of this. This is not a gold standard, but I would suggest that you kind of write this down and kind of understand why, because when we start looking here and sorting positions, right, we sort all of that up. Anything on the treasuries above 25%, like the Russell 2000 mini, 22%, long bias. If we went to the Russell 22%, okay, and we just kind of went into this data here, let me just go back and show you guys. If we just load the Russell here, to me, you start kind of paying attention to this. Like to me, the Russell told us right here on this day that, institutions were going to start buying this market, right? But what's really cool about this is that we can also see the significance of it here. We can see the significance that the Russell 2000 mini is pretty significant, right? That increase is a significant increase as opposed to just an increase. Right? So when we start piecing together this data and you start saying, okay, wait a second, I'm a Russell trader intraday, or I look at the Russell as one of my markets, which we heavily do, by the way. We can start to see that, the big boys are buying this market, but it's actually pretty significant, right? And we can see that on the indicator as well, that the rest of this week, they drove that market straight up, right? Now, how do we trade it? We go into our day trading system and we look at the zones we trade, the profiles that we trade, the levels that we're trading, and we use that to our advantage. But what this should be doing here, this should be telling us that we need to think like the big boys. And I'm going to end with this. If all you did was just take this and you did that every week and you said, wait a second, I'm going to trade in the direction of these guys, I can assure you you're a hell of a lot better ahead than we were before. And that's a serious statement coming from me. Okay. So I'm glad to have these guys on my team. You know, Thomas, Valiant, thank you for all of your hard work. You know, you guys definitely deserve accolades for taking the time to be here today. But more importantly, the work that you guys put in to do this is just outstanding, right?
Well, thanks, Sean. Thank you very much for letting us show our service and analysis. And yeah, we're very pleased ourselves that we could finally manage to put together Ninja Trader Indicator. And you know, if anybody has further questions later on through you, or you can directly email us questions. We're here and happy to help you. By the way, we've got tons of information on the website for anybody who's, you know, wants to dig deeper into COT analysis and understanding all the bits and pieces, other report types, data types. Well, there's a lot to know, but I believe, Sean, this presentation, this webinar was wonderful for anybody new to COT data and COT analysis to really understand and grasp the importance of this fundamental data. So,
well, I think the biggest takeaway for me, Thomas, was you said that it's the only indicator that it's not derived from price.
Yeah,
and
exactly.
You know, to me, everything else we're doing is derived from price, whereas this is derived from fundamental institutional positions, right? It's basically, you know, it's kind of like they're you know, when you're in a poker table and they put their hand, it's like, okay, I'm all in. This is what I got. And that's what they're doing. The big guys are saying, okay, we're all in. These are our positions. This is what we're doing with the funds.
It really gives you a compass in trading, understanding what the majority of traders, the big players, as you said, are doing. So it's a key element, and I would say in everybody's trading system, I would recommend using it.
Absolutely. Well, guys, just to kind of close off here, how many of you guys are going to be moving forward with this so that I can gauge the understanding of communicating with these guys? How many of you guys are planning on jumping on board this? I'd like to work with them. We might even put together some type of extra VIP training on this. You know, I was talking to Thomas and the guys, and you know, saying that, you know, if we get enough people on board, I think it'd be wise to host a private community, you know, deep dive training on all that and understanding that. So you know, I just want to kind of gauge it. If you've got questions, type them in the chat box. But if you just want to follow up with an email, let us know, and we'll definitely help you out. So thanks for being here, Thomas, Valiant. Great work. And guys, yeah, thanks for being here, guys.
Okay, see you guys.
Thanks, traders. Thanks for your attendance. As always, we'll be sending out a recording, and we look forward to trading with you guys. Move forward.